enthusiasm for crypto is still, I think it's muted from what I can tell. I mean, implied volatility just hit a 9-month low for Bitcoin. We're not seeing a lot. I'm not seeing a lot of positioning for sort of like convex movements one way or another. And I'd love to get your thoughts on what you're seeing.
Yeah, I mean, crypto has been crypto to a certain extent. The simplest answer would be crypto's been dull compared to tech stocks.
Mhm.
You know, I think to a certain extent, there's a if you had to draw a Venn diagram between crypto enthusiasts and tech investing enthusiasts, tech traders, there's probably a pretty big overlap between those two circles. Um, and so, and momentum based trading or momentum based investing has been a huge feature of recent markets.
Mhm.
And so, quite frankly, compare if you're if you're looking at your portfolio and saying, okay, my crypto's it's not doing much. And tried to rally, let's call from 65, I'll use Bitcoin from 65 to 80, and that didn't really pan out. And meanwhile, I bought Micron Technologies, and that's a however many zillion percent. Um, where am I going to want to go with it? And I think that's a big issue. I also do think that looking down the road, um, if I were going to look for excess liquidity to invest in some of the IPOs that we discussed earlier, again, I would think that many of the people who would be thinking about investing in those IPOs, at least from the individual side, not from the institutional side, would be people who might view their crypto positions as something that they could sell to buy those IPOs. Not advocating for it, but I think these are pressures that I think crypto is facing. Also now the other feature is, let's go back to the digital gold argument, um, which we could. That's a whole other topic for debate, but. Real gold, the yellow stuff, isn't exactly ripping ahead either, because for the most part, unless you're doing some relatively sophisticated stuff with crypto, these are non-interest bearing assets, and interest rates have, as we just discussed, have gone up substantially. And so when you have a situation um, where nominal rates and the money market rates that you were referring to have increased substantially, and you're holding a non-interest bearing set of assets, that's not necessarily a favorable backdrop.
Yeah.
So I think that's kind of why we've seen crypto sort of get a little left behind. They're it's not the sexy flavor of the month right now.
Yeah.
Tech stocks are, and I think it's suffering as a result of it.
Yeah, it's making me think of a couple of different, I guess a couple of different things. It's an interesting juxtaposition. I mean, going back to some of the AI related IPOs that are coming down the pike in the next few months, et cetera. And then you think about, I mean, one of my former employers, Kraken, it's reportedly they've delayed their own IPO. I think Ledger is another one that's delayed it, citing, I think like market conditions. uh, Granted, there's different market conditions for SpaceX and OpenAI and Anthropic, but you could also make the argument that they're so big and they're almost immune to any market conditions at this point right now, because there's going to be so much demand. So it's interesting there. And then I mean, billions of dollars in outflows from crypto ETFs, and I think I saw something. It might have been the FT today. I'm forgetting the ticker, but I think it was like one like hyper focused AI ETF, I mean, like Micron, and like only like two or three other stocks beat one of Fidelity's like crypto related ETFs to like over $10
Oh,
billion.
DRAM, which is the
That's it.
round hill memory ETF, um, depending how you measure it, it either became the most successful IP ETF launch in history, out surpassing iBit, or 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 was neck and neck. It depends how you measure. It depends how you measure it. But bottom line is, um, you know, crypto got that was a huge boom for crypto. I mean, you had sort of the perfect storm between easy accessibility via ETFs and an administration that essentially was outwardly touting the benefits of crypto. That was as good of a scenario as you can come up with. The downside of that ETF adoption is, I think I termed it as, normies own crypto now too. And it hit me when I was invited to speak at a crypto conference here in Connecticut. And I looked around the room and I was around the average age. I thought I was going to be like, grandpa going in there. And it was a lot of people who'd gotten into crypto via the ETFs. The good thing at the time was that led to huge inflows and obviously price increases. The
Yeah.
bad news now is, to a certain extent, they're crypto tourists. They can then say, you know what, I bought, insert name of crypto ETF or ETP here. I bought this, it did well for a while, and now it's not, or I bought it at the highs and it kind of, I mistimed it completely. Let me move to something else. That if these people, if it was bought by performance chasers in the first place, it's going to be sold by performance chasers as something else outperforms it.
Yeah.
And that's not me taking a view one way or the other on crypto as a long-term investment, but that's just that I do think that is a very important consideration. You can't dismiss the importance of money flow. And for better or worse, the huge success of crypto ETFs was such a boon on the way up. But now this is the flip side of that trade. I'm not attributing it specifically to that, but it to many investors now, it's one more sector among their speculative momentum-based investments. And also think, by the way, of the popularity of some companies like IREN and NBIS, which have largely changed from, they basically changed their business model from data centers, from
Bitcoin
crypto
miners.
mining models to AI data centers.
Yeah.
The computing powers, also, I'm not going to say fully fungible, but it's migrating.
Yeah, and I didn't mean to interrupt you, but we've done entire shows
So,
on
yeah,
that trend
no,
on that transition. I had I think John Tadaro from Needham. I don't know if you know him. He walked me through, I mean, the economics of that,
yeah,
and I mean, it makes perfect sense. I mean, you're buying an asset that, or you're producing an asset in Bitcoin that, from their point of view, it's not moving up exponentially anymore. It's getting hash rate keeps going up. It's more competitive. It's more expensive to mine, or you can go like turn yourself into some sort of like hyperscaler, get a 10-year contract from Google for an ungodly sum of money. Like, what are you going to do? I certainly
yeah.
get that. But it makes me think all of this. I understand the points of view you're saying here, and again, none of this is financial advice, but it does also, I think, this could have a cleansing effect for Bitcoin. I mean, we in crypto in general, we've spoken about, I say like me, like on other guests on the show. There's a lot of other. There's a lot more competition for that sort of like highly risk on money. Like there's prediction markets, there's AI stocks, there's lots of other places, not just
Mhm.
altcoins. And in certain ways, I think you almost need to have some more. You need to have a real sense of purpose when you invest in crypto today, because it's not the sexy thing to do. I mean, people on this show will know. I mean, it's you. There's a common saying: you're not really a crypto person until you've seen your net worth drop by 90% and then have it go up like 300% thereafter. The normies, you said, they may not have the stomach for it, but it's happened to me multiple times, and plenty of longtime listeners. You just, once you get through it once, you're hardened, but it looks
Yeah.
really scary on the way down. And I think sometimes that comes. It makes me think of like Howard Marks or Warren Buffett, in the sense that like you have to really uh, put your money in when everyone else is bearish. I mean, Howard Marks did
Mhm.
in the distressed credit space, and
Yeah.
he made a fortune out of it. BlackRock, I mean, they launched their ETFs I mean, they filed for them during a crypto winter when Gary Gensler was still SEC chair. So I mean, it was not a popular thing to do, and they did it in against the backdrop of a highly crypto skeptical regulator. So we'll have to kind of see what happens, but certainly there's a lot more competition for the money that would just automatically go into crypto, and I think some of those ETF flows that we spoke about encapsulates it perfectly. So we are just about at time, although I know we probably could go for another 45 minutes or so. So I just want to ask you, like one or two quick closing questions. We talked about a lot today, inflation, gold. I would even get to what's happening with the rising dollar and the flattening yield curve, sort of the divergence between equities and kind of like geopolitical, I guess, uncertainty. What is like the one thing that you're really going to be watching over the next few weeks?
I think number one, right now is, I alluded to it at the top of the show, is how does the stock market react if we get a peace deal? I mean, if we don't, we just sort of muddle along again, and at some point, traders get tired of it. But I think the question, to me, the number one question that really jumped out at me today is, and I wish I had an easier answer, is are we in a are we to buy the rumor, sell the news scenario, whereas a peace deal is a negative, or is it just, or market's not reacting better today because they're sort of skeptical of it, which means they can rally further.
If you've been loving Bits and Bibs, don't forget that the show is transitioning to its own feeds on X, YouTube, and your favorite podcast player. If you're not already subscribed to Bits and Bibs on its own channels, go there now and hit that subscribe button so you can keep up with our twice-weekly live streams and Macro Meets Crypto breakdowns. Bits and Bibs will only be on the Unchained feed for a few more weeks, so subscribe today to be ready for launch. You can get all the links at unchainedcrypto.com/bitsandbibs.